Hey guys, it's Carter. I just wanted to show you where I think the S&P is heading next. This is going to be a very quick video, but I also want to highlight some of the risks that are in the market right now. It's a very risky time to be in the market in terms of the long-term investing standpoint. Now, I do think we're heading up very shortly. However, if we don't and we do some certain things, I want you guys to be prepared and what to look for. So, without further ado, before we jump into what I think is about to happen in the S&P, I'm not a financial advisor and I don't give financial advice, so never risk more than you can afford to lose when trading. Alright, what you see on the screen here is the chart of the SPY. We're at 563 and 68 cents. So, this ascending support line is massive. It's everything in this chart right now. We dropped it here straight into this demand zone. This is where I said, hey, we're going to see a move up, probably to this resistance level, and we actually blasted through it and held it as support. So that's the key thing here. So this resistance, I hypothesized as resistance, actually being held as support. So move up, sideways consolidation for the last couple of weeks is what we've been seeing. And if you know your chart patterns, you'll be able to recognize that this right here is a textbook bull flag, and these have a high probability of breaking to the upside. However, there is a possibility that we break to the downside. What would you need to see for downside to become more likely? To be trading below this ascending support. So if we close and confirm, it's very likely we head to 545 to fill in this gap right here. And if we do that, there's a possibility of coming all the way back down into this demand zone. This level would have to hold here, because if we don't, well, we could take a trend line from this pivot low right here, connect it through this pivot low, and you see more support in this demand zone. But it gets very dangerous if we start trading below this support. So if we come back down in a move like this, hold it as resistance, that's a huge warning sign, because we've then created a triggered head and shoulders pattern. You trigger it by trading below the neckline here, and then you'd have to project it downwards target. You do that by taking the top of the head to the neckline and projecting that to the scene of the breakout. It would bring you right back to this demand level right down here at around 460. So that would be a huge drop. A not very probable drop right now, but it would be a huge drop that we don't want to see happen. But all can be avoided by trading above this ascending support line up here, and then not breaking this demand zone down here at 525 if you do break this ascending support. But ultimately, like I said, we're in a bullish pattern here, and I am bullish on this chart. As long as we're holding this ascending support, I would be looking for a move up, and we could then target on a move up potentially around the 590 level. If you take a parallel line right here, the middle of the channel, 590, and then the top of the channel would be closer to around 610 when we got up to it. These would potentially be our next major resistance levels, somewhere in here. Okay, so weekly chart of the SPY right now, we're looking at a large ascending channel. These eventually typically break to the downside. So make no mistake, it's not a super bullish pattern right here. However, we are in a very highly speculative wave 5. So I believe we've seen a 4-wave move so far, a 1, 2, 3, potentially the bottom of 4 right here. Maybe it's not the bottom, maybe we make another low, but I think the bottom of wave 4 is in, and that we're in our last gasp stage right here, a big wave 5 that could play out over the next 6 to 12 months. But that would then mean we are very close to a very long-term top in the SPY, and the top of the channel will be resistance somewhere around 630 to 640 on the SPY. So make no mistake, we're not that far off those levels. A common wave 5 target would be extending from the start of the wave 1 to the top of the wave 3, dropping it to the bottom of the speculated wave 4, and we'd have a target of approximately 640 for a 618% move of the wave 1 to 3, which really coincides with the top of the channel. So to really drive home the potential risks of a major top being formed on the SPY, I'm showing you the monthly chart here. So if you look at the move from 2000 to 2009, it was about a 10-year period of devastation. Now, since then, I've seen a very speculative 1, 2, 3, 4, and we're in the 5th wave. And look where this 4th wave bottomed. That was where our 5-wave move up on the weekly chart started. So we've seen a 1, 2, 3, 4, and potentially are on that wave 5 of this much larger wave 5. Okay? So what does this mean? It means that in the next 6 to 12 months, it's very speculative, but we could form a multi-year top on the SPY, and I wouldn't be that surprised. Look at how long this period lasted right here. This was 10 years. Potentially, we could see a 10-year long ABC once again. So things are looking really poor in terms of the outlook over the next decade. However, in the next 6 to 12 months, yeah, it looks like potentially there's more upside. But yeah, something is lying to you on this chart right now. Our strength has been getting lower and lower and lower, but price, higher high, higher high, higher high. One of those two indications right there, lying to you. It's either price action or our strength, because right now our RSI is getting lower, so we are getting weaker, but our price is going higher. And to be honest, it's likely that the RSI is correct and that price is moving in a way that it shouldn't really be moving for a long time. So what this means is that I think there could be a many year long, potentially decade long period of devastation about to come. And that could start within the next 6 to 12 months. And people are not going to be prepared for it. However, you're watching my videos, so you know that this period could be on the way. But make no mistake, I do think there's more upside in the next 6 to 12 months, but it's a very risky time to be in the market because we are very near a long-term top, in my opinion. Alright, that's all I got in this video. Have a good one.
Limited edition, nearly 20 cheap and fit. Everybody can't come on me. I think I'm a big me shop cheese charge. Oh, me getting a girl jump on me. Hey boy, me someone me nothing can.